For more on the state of the mortgage market and the Fed's reaction to the crisis, we're joined by Jay Farner. He's the CEO of Quicken Loans, the largest mortgage lender in the United States. Jay, thanks for joining us. Just tell us over the past couple of weeks, what have you been seeing? What is it like?
Well, as mentioned, I think from a purchase perspective, we've seen applications dip a bit, although there's a lot of pre-qualification going on. So people are wanting to buy a home. They're just delayed a bit. But from a refinance perspective, the applications have been the strongest we've ever seen. In fact, March was the biggest closing month in our company's history, nearly $21 billion in mortgages closed.
And what does April look like at this point?
April will be bigger. We did close to 53 billion in the first quarter, and we're estimating we'll be near 75 billion in mortgage applications in the second quarter. So record numbers there, which is important, helping folks to save money, and our centralized systems have really allowed us to continue to move forward here, although it's become a bit more complicated in the marketplace.
Well, let me ask you about the complication in the marketplace. To the extent that you have economists that are working with you thinking about what's going to happen to real estate values over the next 12 months, what are they telling you?
Well, we are hopeful that we'll start seeing the economy light back up as we get into June and July. And I think if that's the case, we won't see much of a dip here in real estate values because we'll have a shortened window where there wasn't the purchase activity. If, of course, things extend on beyond that, we can't get people into homes and get purchases done, then we could start seeing a drop in real estate values, and that'll make refinancing a bit more complicated as well.
It's not your business, but it is your business to some degree. How do you think about the number of people who may not be paying their rent, what that's going to do to landlords who may actually have a mortgage on a property, and how that cascades or doesn't cascade into the banking system?
Well, it is kind of our business, obviously, as one of the largest mortgage servicers in the country. We've got a few million clients that we're collecting payments from in a similar situation. I think right now the most important thing is education. We're talking to our clients who are thinking about whether they should make their mortgage payment, and taking the time to explain the programs, make sure that they understand the situation is critical. I think there's been a lot of either miscommunication or there's been different communication occurring and people aren't sure what to do. And so we've been taking the time to educate folks on what their options are. And because of that, our forbearance rate, I think, is lower than the industry average. And I would imagine it's the same type of philosophy on the rental market. Working with clients to determine if you can help them other ways is important right now.
Hey, Jay, with rates so low right now, I wonder if there are people who are trying to refinance mortgage and if there's any appetite for that, just given how much chaos there's been in the mortgage market lately.
Yeah, we're having record days from an application perspective. Again, it may come in pockets. As you know, we do business in all 50 states, which is helpful to us. So there can be ebbs and flows in certain states or regions as shelter in place started to take effect. But overall, interest has been at record levels. We'll have a record month in April for mortgage applications, which will translate to another record in closings in May.
Hey, Jay, can we go back to the issue you were just talking about when it comes to people who either think that they can't pay their mortgage this month or want some kind of payment deferral? Let's say you are in a business where you've been laid off. You do have a mortgage payment that would be due. What's the conversation? How's it supposed to happen? What are they supposed to do?
Well, this is an interesting one because in mortgages in particular, as you know, the servicer is taking the guidance from Fannie Mae or Freddie Mac or Ginnie Mae. And so we have got to explain to consumers that it's not necessarily inside of our decision making to figure out what we can do for them. Our tool right now in most cases is something called forbearance. And so we have discussions with clients. That gives you the opportunity to pause on making your mortgage payments. And right now it has no impact to your credit. But at some point in time in the future, we've got to catch those back up. And there are a variety of ways in the past that that's been accomplished. Right now, we're still waiting on guidance to determine what that will be here for this crisis. And so it leaves the clients a bit uncertain. What we're working with is trying to explain to people what their options are and also understanding if indeed they should skip the payment or they shouldn't skip the payment. because at some point in time you will be making that payment back. It's just a matter of how we'll figure that out together. And that's why taking the time, pause. We've grown our servicing call center by hundreds and hundreds of people, all working from their homes to take the phone calls, answer the questions. Our technology team has stood up a website that allows folks to get those answers as well. And I think that's the most important thing, is that just everybody kind of take a deep breath and do the research and then make an educated decision. And if forbearance is the right thing and taking a pause on the mortgage payments without affecting your credit makes sense, well, then that's what we'll do.
Okay. Jay Farner, we appreciate your time, your perspective, and all the work you guys are doing right now. Thanks so much.
You bet. Thank you.